Hey, what's going on everybody? Leo Invest here, back with another YouTube video. This video I'm going to be recapping my NASDAQ shorts that I took on Monday, July 25th of 2025. And this video is going to be a very great video showcasing an A+ short that I had taken. And the reason why I think this is an important one for all of you to watch is because we're going to cover a little bit about these candle continuations, as well as finding these draws on liquidity that we can see market going to in order to properly map out our price targets. Also in this video, we'll be covering a little bit about SMT within two correlating assets and how we can use other aligning confluences to help us align this A+ entry. And so getting into it here, what did we notice happened during this Sunday open market? As many of you know, futures reopen on Sunday at 6 p.m. Eastern time. And so typically that's where we see the start of a new week. And so what did we see happen here on Sunday, July 27th, upon this new weekly opening gap? Well, we see here we actually formed a brand new weekly opening gap, also known as NWOG or NWOG. So we'll mark this on our chart because this is an important key level that we'll be watching for more information for this short setup. And so here we see that Sunday market opens. We saw a large gap up on NASDAQ as well as ES here. And so let's look more at the hourly time frame for what I was looking to see. And as many of you know, when market does have a gap up, market typically does like to retrace and fill the new weekly opening gap, since this is a lot of unfilled liquidity from that market closing time from Saturday up until that Sunday open. And so typically you can use the new weekly opening gap as a very solid draw on liquidity when taking a potential trade. But here's the twist. With NASDAQ on this Sunday open on the 27th, what did we see happen? Well, NASDAQ actually formed an all-time high. And so what happens when we see an all-time high like this? Well, it's difficult to trade. And the reason why is because we do not have a lot of key levels that can help us align for a better quality setup. What do I mean by that? Well, when we look for trades, especially when we are trading higher time frame sweeps or key levels or resistance and support, we like to look at previous trend in order to find key levels that we can watch be swept prior to entering some type of market reversal signature. But in this example, when you make it to all-time highs, it's extremely difficult to find these key levels because there are none. There is no levels up at these all-time highs. The new levels are created as we break into these all-time highs and create this higher and higher trend. So how do I typically approach these all-time highs? Well, it goes into my general analysis with these trades, which we'll get into now for my weekly analysis. So before we get into the actual trade, I just wanted to give you guys a little bit more insight as to how I was watching potentially playing these market all-time highs that I alerted into the lab. Here we see on the 28th at 8:17 a.m., I'd mentioned how market was at all-time highs. And so typically when market reaches an all-time high, you don't typically want to play all-time highs since you can't really use any previous key levels. And so typically what has worked with myself and my trading model is exactly what I had mentioned here, where I'm looking for a higher time frame sweep plus some type of SMT divergence and a change in state of delivery in order to align a potential market structure shift into a short position. As I mentioned here, we wanted to see this new weekly opening gap get filled, and so watching for some higher time frame sweep up at these all-time highs, followed by some type of divergence between a correlating asset, in this example being NASDAQ, it would be in correlation with ES, would be what I would be looking for. And then obviously when we are using the hourly time frame, we would use the 5-minute time frame, which is the aligning time frame with the hourly, in order to find a potential short signature into this new weekly opening gap and potentially these Asia session lows. So now let's actually get into the trade itself and how I aligned the smaller time frame to find this entry. So now, hopping back onto the charts, what did I mention with that Discord analysis? Well, as I mentioned, when we see a new weekly opening gap, I can utilize that new weekly opening gap as a potential key area of liquidity interest. Since we did see a lot of unfilled orders at this gap up, market makers tend to like to push price down and fill the gap prior to then seeing an expansion higher. And as I mentioned too, when you are at all-time highs, you cannot use previous key levels to help you with a potential entry signature. And so it's best that you use the current higher time frame, aka the current hourly candles, to help align an entry that works best with you. So let's now hop into the 5-minute and break down my actual model entry and how I managed to depict where I could see market going, aka my draws on liquidity. So here we are on the 5-minute time frame on NASDAQ here. And what do we see is happening on NASDAQ on this 5-minute time frame? Well, similar to the hourly, we saw quite an expansion higher. NASDAQ expanding, retracing, expanding, retracing, expanding, retracing until we kept breaking out of these all-time highs. And so as we look at this here, what exactly am I watching for? Well, as I mentioned in my analysis, typically I want to look for some higher time frame sweep paired with an SMT to a correlating asset. And so here with NASDAQ, typically NASDAQ, we either use ES or YM. And in this example, I decided to use ES as my analysis for my SMT divergence. So let's open up ES now on the right-hand chart, and you guys can look a little bit about what I saw prior to entering this short. Well, here we see we had the end of the 1 o'clock candle, which formed this 1 a.m. high, which we'll mark out here and mark this as our 1 a.m. hourly high. So we have our 1 a.m. high here, and then we see as well on ES, if we map out this 1 a.m. high, here is our 1 a.m. high right here, which we'll just get this here, mark this out, and we have our double 1 a.m. high. So now, what was I looking to see? Well, I was looking to find a sweep of this 1 a.m. high with the 2 o'clock candle, which conveniently happens to be the open of the London session. And then I wanted to see some SMT form at the highs. And if we look at NASDAQ and ES here, what exactly did we see happen? Well, we saw exactly that, where we saw an SMT form at these highs on the 5-minute time frame. So we'll mark this out in a blue line so you guys can better see these SMTs that formed. And so why did this actually create an SMT? Because I've gotten a lot of questions about people saying, well, NASDAQ swept out the previous high, ES created equal highs, that's not an SMT. But actually, that's a common misconception. When you are trading SMT, SMT can be a lower high or a higher low paired in with an equal high, and that can help you find the divergence. And so this SMT, which we had a double SMT that was formed actually, but we'll mark out this second SMT, we saw that ES had formed this triple equal highs here, while NASDAQ ended up creating a lower high. So with these 1 a.m. highs now marked out on NASDAQ and ES, what did we see happen with NASDAQ and ES? Well, with this 1 a.m. high, 2 o'clock opens up, 2 o'clock now swept out that 1 a.m. high, then formed an SMT between both NASDAQ and ES here. And so once we see this SMT form as well as the sweep occur, what am I watching to see? Well, as I gave you guys the analysis in the Discord channel, I wanted to see a sweep of a higher time frame candle occur, being the 1 a.m. hourly high here, which was swept out by the 2 o'clock. And so what caused this sweep? Well, this 3 candle body undisrupted closure actually caused the sweep prior to that SMT, and then we had this SMT formation. So what does this 3 candle body closure actually become in this trade? This becomes our bearish change in state of delivery. So in order to validate this SMT, as I mentioned before, SMT is kind of just like a hypothesis. And to really validate a hypothesis, you need to prove it. And so getting a confirmed market structure shift, and in this example being the change in state of delivery, that is what will validate the SMT and make this short setup a higher probability trade at these all-time highs. And so for me to enter this trade, I want to see a bearish candle body close below this change in state of delivery in order to validate me into a short signature. But before we get into the actual trade entry, it's important that we map out these major draws on liquidity where I can anticipate market potentially going in order to take an A+ trade. And as we see here, we have the Asia lows that I already have marked out in the chart here. Here we have this 8 o'clock Asia open, and then the Asia formed these lows at this low here at price level 23,525.25. And so this became my major draw on liquidity, because if we think about this 1 a.m. sweep, this was an higher time frame hourly sweep. We also swept the Asia lows, but also we had this new weekly opening gap that had not been filled yet. And so for myself, I had a very strong bearish intent for this short signature, finding these Asia lows as my maximum draw on liquidity. But where did I also see market with another potential draw on liquidity here? Well, if we look down at these lows here, we have this 3 candle body up closure followed by a retrace lower, and this bearish candlestick actually created a bearish breaker block here. So we'll mark this out on my chart and expand this out so we can see this a little better and map this as our bearish breaker block here. So now we have my 2 draws on liquidity here prior to this trade entry. And in order for this trade to validate once again, I want to see a 5-minute candle body closure below this change in state of delivery in order to validate this short signature. So let's now play out NASDAQ and see exactly what happened prior to this trade entry. Here we go. We get a bearish closure back below this 1 a.m. high, looking good here. And then finally, we get this bearish candle body closure below this change in state of delivery. So what does this become? This now becomes my entry signature into this short position. And just to mimic this trade exactly, I did enter this short position with 3 contracts. And so now, where does my stop loss lie and where do I want to put my price targets? Well, let's actually map out this short signature with my entry here at 23,570.75. Now my stop goes at the high of the candle wicks. So where we form this SMT with the S, we have the high. So this is a 14.5 point stop with my first partial wanting to be at this 2R here. As I mentioned with all of my trades, I always look to shoot for 2R on this trade. But if we look at where my maximum draw on liquidity lies, it does not lie at 2R. The maximum draw lies at these Asia lows that we have down here. So here we have my 2R mapped out. I'm going to take a line and just map this out for you guys to better see visually as we replay this trade. Going to mark this out as our partials, where we'll also move to break even. And break even will only be met once I see a candle body closure below this 2R period, with my maximum draw on liquidity being this Asia session low now. So here we are. We'll put our stop loss at the change in state of delivery candle wick high, and then put my take profit down to these Asia lows. But remember to take 2 partials at this 2R here. So now let's let this trade play out and see exactly what happens with NASDAQ during this short signature. Candle here, we get a continuation. We were in drawdown for just a second, but then had a continuation lower. And then what do we see happen here? Well, if we look closely enough, in between this change in state of delivery, what do we see happen? Well, we have a fair value gap that forms here on this change in state. And because it's a change in state of delivery and then a fair value that forms quickly after this quick manipulation below this change in state, we can now anticipate that market will want to retest this change in state prior to expanding lower. And so let's see what happens here. We see market taps the base of this fair value gap here, and then finally goes inside of this breaker block, respecting the encroachment level or the 50% level of a fair value gap. And so for this trade to still be a very valid high value trade, we want to see this fair value be respected with a bearish candle body closure in order to validate a continuation signature lower. And here we see we validated that fair value, engulfed the previous bullish candle, and now we can anticipate a potential move lower. So let's now play this out and see exactly what happens here. Here we go. We are now up 600 on this trade, waiting to see if we hit these partials on this trade setup here. We now tap into this breaker block here, tap into it again. We see we close below this bearish breaker block now. Then we retest into that breaker, respect that breaker once again with a bearish closure, close below, where we now take out 2 of my contracts, 2 of the 3 contracts to now secure these partials, and with my final one now being at this Asia low here. So we'll let this play out since I actually was in this trade for a decent amount of time. We see that we respected this bearish breaker block once again, and then finally a aggressive bearish closure, which took us out of this trade at a beautiful 3.2R or 3.10R in this example. So this was a very high value trade for myself. And before we go into the Discord analysis to summarize the end of this video, I did want to just give you a summary on the charts here. Here we saw the formation of that 1 a.m. high, the 2 o'clock candle or the 2 o'clock hourly, which is the start of the London session, swept out the 1 a.m. high, formed an SMT with a correlating asset. And in this example, the SMT was with ES's equal highs. Then we got a closure below a market structure shift, which was this 5-minute change in state of delivery, which now validates our SMT as a true divergence since we have proven the hypothesis. We then form this fair value gap, retrace into this fair value, respect the fair value gap, then continue lower, respect this breaker block, close below the breaker, take out our partials, retrace to the breaker until finally we get a slow grind down into these Asia session lows. So this was a beautiful A+ trading example for myself, and now I'll quickly go into the Discord analysis just to end off the video here. So we can see my channel here where I gave you my pre-market plan at this market all-time highs. Then we see that we had this short on NQ that was entered just after that change in state of delivery with that delayed entry with this fair value gap. Then I mentioned how I wanted to see a closure below the hourly equilibrium, this dotted line, for a continuation signature, and then all the criteria was met for this to be a validated short signature once we got below that equilibrium. And here I was looking at this, respected the 5-minute fair value gap with that re-entry here, and then as we see this bearish closure continued lower, then respected a move, continued lower, saw these partials at 2R with that maximum draw at Asia session lows. And then we broke below this breaker, respected the breaker, until finally we see here, I was taken out. And so that final contract, this was with the original entry I'd mentioned with that change in state, but was not getting that order filled when I'd wanted. So that entry was taken on the fair value just before that respect of the fair value gap there, mapping out a beautiful A+ trade by utilizing those higher time frame sweeps, SMT, and that change in state of delivery. So if you guys did enjoy this video, once again, feel free to like and subscribe for more videos like this one, and I will catch you all in the very next video. Thank you. Bye now.